Top 12 investment tips that will make investing easy for you. Nowadays, the field of investing is witnessing a boom in participators. This growth is because more and more people are becoming financially literate and are looking to make money in the stock market or other investment schemes. If you are one of these people, it would be best to remain as informed as possible. In this video, we bring you 12 investing tips that will make investing easy for you. Before we dive in though, please make sure to like, subscribe, and turn on notifications for the channel. These activities are an excellent way to support us and show us that you enjoy our interesting and engaging content. Now, to begin with, even though investing has risen in popularity in recent years, there is still a distinct difference between experts and novice investors. Experts know when to cut their losses, while novices are devastated by the volatility of the market. The tips contained in this video are intended to bridge the gap between the two. So without further ado, let's get into it. Number 1. Set investing goals. This piece of advice might seem boring to those who are unfamiliar with it. However, those who practice goal setting know of its immense power. This tip should even be self-evident and not something which needs to be argued. After all, if you don't know where you are going and what you want, what are you doing? By setting investing goals, you will have something to strive towards. This plan will inform all your decisions and help us stay strong in the face of failure. Number 2. Don't dwell on failure. Expert investors know that failure is a part of the lifestyle, so they can rebound after turbulent times are past. Novice investors do not, and so they allow investing failures to devastate and discourage them. Anyone in this field must accept the reality that they can't win all the time. Even the most expert investors like Warren Buffett have suffered heavy losses in their investor careers. The most important thing here is not to let failure stop you. Instead, learn from your mistakes and become a better investor. Number 3. Don't invest what you cannot afford to lose. As common sense as this may sound, the people who put up vital assets for investment are way too many. For these people, it's worth remembering that there's nothing like a sure investment and that risk is an integral component of this business strategy. And so, it must be stressed again and again not to invest what you cannot afford to lose. This way, if your investments fail, at least you will not be thrust into financial ruin and you will have a firm foundation upon which to rebuild. Number 4. Have a backup plan. People often say they put everything into investing so as to motivate them to do everything in their power to succeed. This advice is less trustworthy than it sounds, as these people always have some sort of fallback, be it parents or a partner. Having a backup plan does not make you a weak investor, but rather an intelligent one. And so, make sure you always have reserves of cash somewhere that you can rely on in case things turn sour. Number 5. Don't follow the crowd. Though social media has created many spaces where investors can commune and exchange ideas, these very spaces can sometimes make a groupthink attitude that is more harmful than helpful. Investing is not group work, as each person could have different degrees of risk, capital, and interest. And so don't be passive and reactive, eager to go where the wind blows. Instead, try to be more active and proactive so as to get ahead of the competition. Number 6. Listen to the experts. Making your own path is an honorable endeavor, sure, but it doesn't mean you have to go without help. Experts exist less to lead the public and more to help them make their own decisions. Even the most maverick of all investors have experts in certain fields whom they lend an ear to. And so, on your investment journey, make it a point to look for these experts and listen to their input. Number 7. Diversify your portfolio. Having a singular focus is an excellent thing as it will help you eliminate distractions. Even so, investing in only one area can potentially be devastating. One investment tip worth considering is to diversify your portfolio. This means putting your money in other investment areas. Other than stock, you could also try real estate and cryptocurrency. These areas have varying degrees of risk, so it is worth analyzing them before you invest. Number 8. Do your homework. Certain people have a rather simplistic view of investing. They think it's as basic as throwing your money into a financial scheme, waiting and praying, and having your money grow beyond its initial value. Though this kind of mindset has served people well in the past, these same people were always at the mercy of the caprice and volatility of the market, even if they didn't know it at the time. Unlike these individuals, intelligent investors know everything there is to know about their investment scheme and are well aware of why it succeeds and where it could fail. Doing your research about your investment schemes will help you make better decisions with your money. Then, when you succeed, you will know exactly why, and you will learn how best to capitalize on this success. Number 9. Get in early. Investment opportunities pass us by more often than we might think. The problem is, most of us have our brains trained to ignore them. These investment opportunities very rarely present themselves as glamorized and well-thought-out schemes. Instead, they are often smeared with risk, vulnerability, and sometimes even financial danger. Though it isn't a bad thing to see if an investment scheme can survive the test of time, most of them can still pay a lot if you can get in and get out early. And so, temper your hesitation and be a little more accommodating of all investment opportunities, even if they might not look like much at the start. Number 10. Manage your finances properly. In going to war, armies make sure that all their ammunition is accounted for right down to the tiniest bullet. As an intelligent investor, you should adopt that same degree of meticulousness regarding your cash. It is smart to have all your finances and assets organized before jumping into any investment scheme. That way, you will know precisely just how much you are making or losing, and you will be able to make adjustments to that effect. Number 11. Control your emotions. Emotions are a good servant but a bad master. Actions taken in the heat of passion could have dire consequences. So when investing, we must make sure not to become too angry or frustrated or sad that we make decisions that will haunt us long after that. And so, it is best to temper your emotions and to make decisions when you are somewhat level-headed. Number 12. Learn to read market trends. The market is full of volatility, sure, but when you zoom out to consider the time span of months to years to decades, certain truths become apparent. And so, as an intelligent investor, it would do you good to consider the big picture more often. Don't get so caught up in the minutiae of what you are involved in, and avoid missing out on some change that is sure to take the financial landscape by storm. Instead, learn to read market trends. That way, nothing can surprise you. Coming to the end of this list, we hope you have learned a lot about investing. Some of the tips in this list may work better for you than others. Still, they're all worth trying out. Is there any other tip you think we should have included? Make sure to discuss it below. As we sign off, please make sure to like, subscribe, comment, and share if you liked the video. We enjoy helping you achieve your personal development goals. Our next video is sure to be as interesting. Until then, have a good day.